And a perfect song to start the day this Friday. Oh, hey, it's Andrew Horowitz, and welcome to the TriggerCharts pre-market rundown for Friday, January 28th, 2022. And I don't know about you, but I'm ready for this month to be over because there was no hiding, there was no getting away from the fact that there was nothing that really worked unless you were committed short entirely, and that had its own problems as well, as you'll see from the gyrations that we had just this very week. From the moves that we saw, the 1,000-point down on Monday to up, which was an incredible move. It seems like it was a month ago already, to what we saw throughout the week. The fact was through yesterday, midday, markets were pretty flat, not really moved up or down that much when you take it in totality. But now, by the end of the day yesterday, we saw another rollover, taking markets down only about 1% for the week. It seems a lot worse, doesn't it? Fact is that there were individual stocks that you could have shorted. Play the intraday trends. That was definitely something that was very good for those traders that can weather the very quick moves on a regular basis. But we're going to talk today a little bit about some of that, but also about some of the things that we saw today as well with regard to the latest economic numbers that came out. Fact of the matter is, very difficult market. And these are one of these markets that you want to do a couple of things. And I want to tell you this right on the front here. Number one, you got to be careful about your position sizing. When you see the VIX above 25, 30, what that tells us is that there's going to be a lot of perceived volatility. With that perceived volatility, what that means is the ranges of the moves, the absolute moves on the day, by the hour, by the 15-minute, are much more exacerbated and much larger, thereby giving you a very big problem if you have tight stops on, or if you are trading in a way that had a lot of positioning on. In other words, whether you're using futures, currencies, ETF, stocks, whatever it is, if you really load up on positioning, and these things are moving way outside the ranges of normal levels of your ability to handle the risk, what happens is that you get pumped out much faster. That's why during times of extreme volatility, unless you want to be some kind of hero, you want to make sure to reduce down your positioning. So if you're a 4-position trader on futures, or you're utilizing a standard stock that you have, and let's say you're using 200 shares at a time, or a particular number like 10,000 or 20,000 in a trading situation, or 50,000 or 100,000, whatever it is, cut that way down until you can get more comfortable with nailing the actual moves. Before we go any further, we have to mention, of course, that investing, as we know, involves substantial risk. Past performance is not a guarantee of future results, and a loss of your original capital may occur. A lot of people are learning that right now. Probably the worst January we've seen ever, at least for decades. Seeing those records break on a regular basis, whether it's from inflation, whether it's from volatility, whether it's from movement. So just keep that in mind as you are working these markets. Please consider the information we're talking about today educational only, and always use your best judgment when investing. And that's a tough thing. You know, one of the things we talked about, I'll kind of just give you a quick heads up on something, the Disciplined Investor podcast. We've been talking about this over the last couple of weeks. And over this week and next week, we're going to probably continue on this discussion about what happens when emotions get in the way, when we're looking at some of the things that are happening in the markets, the volatility, how do you deal with the correction? Different than the trading mentality, because we're talking about investing mentality. Much different, much different. You notice on the top line that we're looking at right now, and we can kind of bring you over to that level right here, that we're seeing that the Dow Jones Futures, even though we're seeing that Visa and Apple, 2 of the components in there, are doing very well this morning. They are down. We have the ES down slightly, moving up. Now, this is up. It was down 400 points, the Dow, earlier. The NQs were down 100 and change, now up, and a lot of that is due to Apple, of course, as we're seeing. Gold took a pretty big beating, one of the worst beatings this week than it has in many weeks, although it has been doing pretty well, interestingly enough, against the dollar rising. Bitcoin down by, 32 and change last weekend, had a decent recovery this week. So pretty good on that level over there. I think that right now what we're going to see is a little bit of a relief rally coming in today. Each week I try to tell you my prediction just for the fun and game of it, where I think things are. Well, I will tell you before we even talk about anything, where is the theme of this week and what is going on? Clearly, a train wreck. There's no question that we've seen a substantial amount of, when you see the whites in their eyes, and what are those whites? Well, that's the train coming right at you. Fact of the matter is we've seen this incredibly broad sell-off that is happening in the markets, and that has been triggering a lot of other undue and unnecessary moves in stocks that are related and unrelated. In other words, taking everything down all at once. And we saw that last week indices were holding up pretty well considering everything. And as I mentioned at the onset of this, still, we've seen the Russell 2000 in bear market territory, correction territory plus for the NASDAQ, S&P, and the Dow Jones Industrial Average. Clearly, the small caps taking the biggest hit overall. But these ranges are very fast and very wide, and you're probably learning that because you're seeing it right in front of your face, go tremendously in and out of spits and starts and fits and bursts and this craziness. You'll watch just on the top line here. Just watch. We're talking about right now negative 96 and plus 23 and kind of flattish right there. You'll see by the time we're finished, this is going to be all over the place today. Actually, probably a little bit more even, I would say, volatile than Bitcoin has been of late, as crazy as that can be. Again, trade size. Limit the panic moves in and out by just slowing the roll for a little while. This move that we saw down here, the absolute roll, it's kind of interesting, by the way. This chart feature, and I call it like the ghostly chart. You can kind of draw some eyes in here. You got this ghost, right? All around. We're seeing that in a lot of stock charts right now, and it's been pointing down very severely. Some of them are these multi-strange mountains that you're seeing here, potentially with the big finger, kind of a big FU finger right there, and then this continuation down. You see a lot of charts that look like that right now. It's a very, very bad pattern overall. There is no conviction in the markets. Every side of conviction is being sold. 14,000 right there. End of the month, January, is probably going to be something that traders are going to look to hold on to. But I would say there's going to be probably a lot of volatility that goes into this. The fact of the matter is I want to also mention something else before we even begin. What is going on? Because a lot of people want to know what is going on. Well, there's a combination of over-leverage that is happening in the markets. No question about that. The fact that we're seeing that the people figured, hey, you know what? The Fed's got our back. And a lot of people have never seen a correction this severe that has lasted more than a couple of weeks, 3 weeks. What has happened in the past is that the Fed would come in or the Fed put would be there, interest rates would be low, the Fed would be buying. That's all kind of going away right now. Now, the big mistake that I think they made, and I'm not going to go into this very intensely, but I think the Fed should have waited at this point till after the pandemic totally passed, because now we're seeing there's a new variant that's showing up, which actually could be good for markets, as perverse as that sounds. But what's happening is that they waited too long to begin with. Policy mistake number one. Kept rates low, kept on buying their bonds. Policy mistake number 2, 3, and 4. Then what happened is they decided to say that it was transitory and just let it run a lot longer than it should have. Somewhere in there was a problem as well. On top of that, so I don't know what policy mistake we're at now, but we're at the granddaddy of them all, and them coming in like absolute crazy men and women of the Fed saying, you know what, we just got to really do something and reduce this down significantly because, wow, look at this inflation rate. It's going to be here forever now. So we went from transitory that it was about to get rid of any concern about this to, oh my God, it's here forever. And they're about to make another, and they are making a policy mistake right now, which could really cause a lot of reverberations and problems that would be very difficult for some companies to recover from, and that is to limit liquidity, cash, and they've already seen some burn. And where is that burn? Well, the burn has been throughout the companies that are more speculative in nature. The idea that we have these Fed hikes, these 3, 4, 5, 6, 7 Fed hikes, every single guy out there and analyst is talking about a different number, all the way to Jeremy Siegel in the 7 or 8 range. If we have 3, I think it would be pretty miraculous, because already you're seeing just talk about the first one is freaking out markets, and the Fed does not want to destabilize. That's something important. The other thing that they're making is this policy mistake is that they are hiking and reducing the balance sheet aggressively at the same time. Moronic. They haven't done this ever, and they're trying to really do this hard when you're seeing lockdown still persist. And if nothing else, put everything else aside, the supply chain issues are not going away. So the demand issue is not really going to solve the lack of demand. It's not going to solve the fact that we can't get things. We can't get things because there is a supply issue, not a demand issue as much. They work hand in hand. But when you have China locking down ports and you have materials that just can't be made because the supply chain's all screwed up, what happens is you have a situation where that doesn't help to reduce prices. The fact that oil is moving up, regardless of all that's happening, due to the fact that OPEC's just not pumping as much, and we did some maneuvering here in the United States, boneheaded political moves, well, that's not going to help that part of the inflation problem. So big problems. The idea of the Fed moving from friend to foe is just really, well, stupid right now. One of the other things that's happening here, and then we'll talk about some of the real issues, we went from fundamentals to a forced slowdown. What do I mean by that? Fundamentals are still strong. We saw that Apple came out today. We saw Microsoft last week. Many companies are doing pretty well. A couple of companies missing here and there, but generally speaking, we're still looking at about a 20% overall growth of earnings on a year-over-year basis for the S&P 500 components. Companies that aren't making money still probably aren't making money. Companies that are doing well continue to do well, obviously taking some money from others. We've got buybacks that are still going on. Rates are still low, whether we want to believe it or not. So what's happening is with this forced slowdown is really a problem. The issue that's really shining through in my mind that is significant is how far we came and how far we've gone. In other words, how far we came up and what is happening right now. These numbers right here are just unbelievable. You know, look at PayPal, down 50% from its high. This is all below the high. Is the correction enough yet on some of these names? I don't know. Seems like every day they keep going lower. Twitter down 58%, Baba down 63%. You could read the rest of this list. Unbelievable. And we saw like ARK down 50-something, 60% from their high. They own a lot of these. Peloton down 84%. We know there's problems with that. Lemonade, I never understood their model, frankly, to begin with. A lot of people were all excited and shot up about it. I tried. I read everything about them. I'm like, I don't get it. Stitch Fix, interesting concept. Still not able to execute, down 86%. Some of the SPACs down very dramatically. Clover down 90% and Space down 87%. So a lot of really bad stuff happening. The question is, where is the safe havens? Right now, what we're looking at is balance sheet, earnings, buybacks, dividends. Those are all good things to really consider when you're thinking about if you're an investor rather than a trader. Trader, there is some inclination that I have right now that, you know what, after a bad month like we see now, the opportunity to see a bounce back on a broken chart pattern is still very high. I talked about this. If you follow me on Twitter, which is Andrew Horowitz, one word, just my name, Andrew Horowitz. Last Monday, I put out some pretty significant statistics that I said, you know, things are a little bit ridiculous right now. Remember, it was down 700, then 800, 900, 1,000 points. And I said, wait a minute, you know what? This KRI that we have is a -6. The Spearman's a -95. The McClellan's a -287, and the RSI and the S&P and the Qs, the Nasdaq are like a 20, which is below where we'd say that oversold was. Wait a minute, what's happening? Let's take a look at where we are now. Look at the KRI, for example. Yesterday we closed. Look at all these clusters. You haven't seen clusters forever. When's the last time you saw green clusters? We're going back. There's a little 21. Well, let's take it all the way back. Let's go all the way back. Yeah, there's the last time we saw it right there. March of 20. And what happened? Very similar pattern to what we're seeing now. Now, of course, that was when everything was shut down. So now you not only have a rollover and all these clusters that formed and these 5s and 6s right here. That was 6. All these 6s. These are oversold, and you get these rip-roaring bounces inside of that until you can start finally just getting rid of all these crazy moves. We haven't seen any magenta moves there. Those are pretty bad. Magentas are really, really bad. We haven't seen any of those yet. That's when, like, oh my God, things are really hot, or really, you know, when they're overdone to a point that it's just, everybody's just saying, get me the hell out. Where are we now? Well, we're not seeing magentas, but we're seeing a variety of -5s, a couple of intraday. This was an intraday -6. These little clusters forming on here telling me we're starting to get a little bit of the oversold level. Here's a level 417.62 that we put in that went kind of way back to some heights right here. And those correspond to some other levels that we talked about that we researched. Hit pretty much really close to the bottom. Are we going to retest the lows again? Interesting to consider, but again, the ranges are out of control. It looks like we're consolidating right now. Question is, if this was a flag pattern, upside down, right? So let's draw that really quickly, and let's look at that. If we have a kind of this, and this, and that was upside down, you think, well, it would be, if it was an upside down flag, it would be moving up. This has the potential there to continue on the downside. So it looks like, I don't know, it looks like there's a lot of damage done right now. We would have to have some pretty significant earnings degradation, a Fed that just will not stop under any reason. I don't know. It just looks to me like we're getting to a point of saying, you know what, some of this is getting a little crazy. Oversold, -5 yesterday again, after kind of moving a little bit better off. But the other thing was that I want to show you, this is the McClellan on the bottom here. And the McClellan is in this range that I drew, and -250 is an oversold range. Again, we saw that right about here. It got way down to about -320, popped back up after that big move down on Monday, moved down again into -300, -97 on the Spearmint. Oh my, that's getting there. Do we start to see a little bit of a roll back up of the blue line above the red and starting to show us that there's a potential for a reversal trade? Because it's been a one-way ticket down right here when we look at the S&P 500. These little blips meant nothing on the way down, all the way from 4,800 to 4,300. We're talking about 500 points straight down, 12, 13% on the way down, something like that. Pretty ugly. And there we're seeing some oversold conditions. Does it last on the bounce? That yet is to be seen. The information we saw this morning where inflation came out and we saw that there was significant amount of, I would say, reduction in spending, a softening in spending, and just the PCE, which is the personal consumption expenditure, supposedly the Fed's favorite number to look at, is a significant consideration where we are right now, because everybody was on the wagon of, hello, we have inflation. It's not getting better. It's out of control. It's never going to end. It's always going to be up. Argentina, here we come. We're turning into Venezuela. Oh my God, this is another train wreck of problem, and it is. However, I think that the very nature of tighter financial conditions, by the very course of the Fed simply just saying, hey, you know what, we're tightening, has done a lot of work to really bring down a significant amount of potential. And by the market coming down and the wealth effect really being dropped so significantly between the Bitcoin and cryptocurrencies and the trillions of dollars, I think $9 trillion has been lost recently in markets. GDP was up 6.8%. Durable goods fell. So there's general neutral stance on other measures on that. Economics next week, we have construction spending, ISM manufacturing, crude inventories, ISM service employment data. Some stocks to watch here. And I'm going to mention, you can type in the chat, which is here. I'm going to do it twice to make sure you see it blinking on the bottom or somewhere on your screen. I want you to put your stock symbols in there. Someone, James, in the Q&A put in a symbol. We'll get to that. MVST. We have SLB. We've got a couple other ones that are coming through. I have a list of ones as well that I think you want to see, but let's see where we are right now. By the way, I'll put that in there. If you haven't done so, there's a reason we're the #1 overall, giving you the opportunity to look at the indicators in a much different way than you see, and why we got all the reviews that we have. So make sure that if you're not a subscriber at this point, at least do a trial, because I know for a fact if you do a trial, you'll be hooked. I get emails all the time telling people, oh my God, I love this. People tell me, oh, this is unbelievable. Save me money. Great. Yeah, thank you, Anthony. Very nice. Best indicator in the world. It is, and I didn't pay you, Anthony. I don't even know Anthony. But the fact is that it is a very different look at the markets. It puts it on its head sideways and regurgitates it out to you in a way that's very easily. I'm going to tell you the story if you haven't heard it before. The reason I developed these and wrote these is because I need it to be easy for me. I can't be trying to figure out where things are, make an analysis. I wanted to figure out where is this going to provide me the best opportunities and bias for long short trade on a very short-term situation. I will tell you right now that I do a lot of work on the daily charts, and frankly, we kind of stayed away from the trading recently with all this volatility. Didn't really help our portfolios, frankly, because we have a lot of core, as everybody does, equity holdings, which just got dealt a real bad hand in all this. However, I will share with you that if you're doing intermediate and day trading, that's what this is all about. Really, swing trading, etc., that you can really glean some opportunities here. When you see a market come down this fast, why I implore you to reduce down your size is I am telling you, I have been doing this for years and years and years. And you know what? It becomes very difficult to make appropriate decisions with the speed that things are moving. Let's take a look at over here, and where are we overall? Somebody asked me, is it in here? I don't know if it's in here. No, let's put it in here. Somebody asked me about Roblox. We'll get that in there somewhere. Somebody asked me about what? MVST. We'll put that in there too. There's one more. Oh, yeah, SLB. SLB. Okay. Let's go from top to bottom. I mean, just that we see that natural gas is up 11% is obnoxious. Obviously, there's a lot of concern about what's going on in Ukraine. Where is the chart on this? I mean, clearly, you got a lot of gapping going over here. So let's look at this. Let's look at the future instead. Future up 13% and driving higher this morning. We're looking at it as a 30-minute chart right here. Obviously, what a great liftoff over on a 30-minute chart. If you were tracking this, I like 30-minute charts for commodities. If you're tracking this on a 30-minute chart, you had great opportunities. I mean, let's just look for a second. What do we have? Well, we have some false starts right here and here, some false shorts. Clearly, we know the trend has been higher of late, although getting a little bit overdone according to our oscillator trending movement, which is called the aileron. But, you take this at 410, move out of it about 430. Nothing really going on right here. Some in and out, false starts. There you go. 438 up to 480. That's a 10% move. That is a huge move on natural gas. A lot of concern coming out of what's going on in the Ukraine and in Russia. And what we saw here, right over this area, was this big move again, getting like above that. However, use your line tools. Where do you have resistance? Somewhere right about here. Let's see where that goes. Yep, coincides a bit. Right in this range, you can make it really, if you want to do something crazy, I just thought of this, doing this, you can make these lines really fat, okay? Watch what happens. So make this line, give yourself more of a range. So I'm going to kind of clip the bottom of that and the top of the ones right here. That's your range of this. You start breaking out of that, opportunity arises pretty significantly on the upside, but still a lot of meat to get through here. You still have a lot of nothingness, always looking from right to left, right? Don't we do that all the time? I teach you that all the time. We want to look from right to left. Look here. Always look from right to left. What do we got? Well, we got a lot of congestion. Look at all this congestion up here. Not much in here. Blank area down below. So something to watch right there. Going from the top to bottom, Tesla obviously falling from grace, and what we have is a situation where a lot of people are in the I told you so mode when earnings came out this week, even though everybody expected, and it was a good number. There was some supply chain comments, some other issues that came up. Really, what we're looking for right now is probably a breakdown to where we are. I would say that, 735, 750, not the furthest along out of the question right here on Tesla, but testing these levels is 824s. There's some other levels. This is just a small little island. I'm not thinking much about that. Apple up nicely today will, if it holds, give a lot of benefit to both the ES. It should be also the YMs. This whole range right here should do well because of that. Apple, another stock, everybody's falling. There was this big move lower. Again, a lot of congestion. Then when it finally broke below this 170 number, we'll call it, is where things really got out of hand. You saw it really come down hard. Expectations were building. It is doing very well right now. What at 164? So where are we? Right at the top of the range. Looks like you could probably move, if things play out really well, up to about 170 again on Apple. K-Web we've been talking about just in the doghouse, generally speaking. Did well a few times, bounces, comes up, within a range. I told you this is a long shot. Got to get above 39.66 for something really special to happen. Twitter, disaster du jour, just horrible. From 80 down to 33. Is it time? Is it time? Is it time? I don't know. I got to tell you, it's still moving lower today, ever so slightly with the NASDAQ up. It's early. It's not time yet for the markets to open, but it's early. Markets coming up. There's a 400-point already recovery, which then sets up for a bit of a fade move into the open. That's a concern. The basing right here, you really want to see some kind of further basing. I'd like to see it lift up, but then what you have is, again, congestion there. Not loving that. Let's see what I got here. Let's go to some of the people that are, as I like Roblox. I mean, I know it looks terrible. There's no question about this. There's nothing here. I like it. I like the concept. It's one of these that I'm holding and buying because of the potential for it. I know this is maybe a little bit crazy. They had a pretty good quarter last quarter. I would expect, with the knowledge that you need to really perform right now, that the market is not going to tolerate any crap. Forget about the fact that it is a potential buyout candidate by a lot of different firms for what they do. The metaverse, the gaming, the training of young people to code. There's just a lot of really good here. It's falling into the trap of all the other ones that have the same and similar situation, which is, hey, they came public, they make money. Revenues they make, but they're not earning any money. They could shift that around pretty well, and I think they'd be very smart to do so in the next earnings call. This stock could ramp dramatically. Right now, it's just not doing much, just sitting there, dropping down with the rest of the market, blowing out from 140 to 57. Is there anything else here? Not really. You're about back down to the IPO levels where it came out, right where it was. 60 and change right now, trading at what? 56. It's a speculative. This is one of those kind of taking my best indicators out of the equation. I don't think from an indicator standpoint it looks very good, but again, it's a different scenario here, in my opinion. That doesn't mean it's going to do well. It is a long shot. It is speculative. MVSD, Microvision. Oh no, what is this? Microvast. I'm not sure what this stock does. It doesn't look very good. Looks like everything else. It is basing out pretty good. This coming up. This is actually an interesting scenario right here. What we're seeing here is an aileron which is below zero. Okay, we get to see with our eyes that things don't look good right here. This basing that you see right here, I think is really interesting because what we're seeing here is we've had this before and then it dropped. But I think that right now what you're seeing is a similar situation. It's a little bit longer. However, last time we did see these pops after all this, it looks like it's getting a little bit ready to start turning a corner here on the trend. That would be interesting to watch, and I'd like to see that. What do we have on my list? Lucid, just dropping. This is also another interesting chart. I tried to pick this up right over here somewhere on this bounce to the upside. Played for a day. That was it. Came in after it started breaking down. Look what you're seeing here. You're seeing this break below pattern, which we've seen. Very similar to, I'm going to show you the small caps in a second. You see these long-term lines that exist with nothing to the left, right? When we look, what do? We look from right to left, right to left, right to left. We're looking this way. Okay, now I want to show you something. Similar pattern. Look at that. When you look from right to left, there's nothing down here. There's nothing in this area. Where do we go next? Well, we're probably basing out right there is where we are. That is a nub. Currently trading up, which is interesting. It was down 1.5% on the pre-market earlier. IWM is actually trading up right now, moving up, and everything is turning green across the board. I told you the potential for a bounce. I think this is going to be, in my opinion, you want my guess today, right at the end here, you'll see a bounce, hot move on the open, faded out, and then probably ramped into the end of the month higher, at least to try to save some face into the close of the month. That's what I'm thinking right now. Gold, we saw that kind of one of the worst weeks, dropping after a nice little rally right there. What else we got? TLT is down today. That means that yields are changing around a little bit, that they're selling off the bonds. What else do we got here? SLB, oh, we talked about that. SLB, all-time high due to the fact that oil is still ramping. XLE has been up, trying to short this a few times, got a few points on it just for the heck of it. But really on a daily chart, on an interim chart, everything points up. I think it's a little overdone right now. but that's where we are. Listen, thanks for joining me. Market's about to open. Let's see what happens. I'll see you again next week.